wghcradio.org. You can also make a donation on our website, wghcradio.org.
This is PRX Remix.
My mother, Shamala Gopalin Harris, was always in our hearts. When she came here from India at the age of 19, she maybe didn't quite imagine this moment. But she believed so deeply in an America where a moment like this is possible.
Kamala Harris, Vice President-elect of the United States, marking so many firsts. First woman, first black woman, first woman of South Asian descent. And it's no surprise that her mother's ancestral village in India has rolled out a virtual red carpet. They prayed for her, they drew her name on the ground. Now they're rejoicing for her with firecrackers, music, and sweets. And every news network is tracking down every Kamala Harris uncle and aunt they can find.
I'm very happy that my sister Shamla, her mother, would have been very happy and proud of her.
Everyone wants a piece of the first female vice president of the United States, or at least a few degrees of separation from her. A friend of mine who hails from the same part of India as Harris's mother says she got a joke forwarded on the family WhatsApp group, even as the networks were just about calling the election for Joe Biden. It goes like this. Actually, Kamala Harris is Padmanabhan's sister's son-in-law's father's sister's husband's brother. You know, P.V. Gopalan's granddaughter. I've seen her Chennai cousins at my niece's child's first birthday. This is Sandeep Roy in Kolkata. The irony is, in the rush to claim kinship with Kamala Harris, Indians brush their own rather checkered history when it comes to race under the carpet. A friend Riley wondered how many of the people rushing to claim her as their own would have been so accepting and enthusiastic.
All right, thank you all for tuning in to WGHC 98.3 FM, your voice, your music, your station. My name is Jeff Badu, and I'm a parallel entrepreneur and a wealth multiplier. I'm the founder and CEO of Badu Enterprises, LLC, which is a multinational conglomerate in the finance industry. And what we do is we provide a suite of financial services, including tax preparation, tax planning, tax representation. And today, the company that's hosting this presentation tonight is Badu Life and Health Solutions, LLC, which is primarily a life insurance solutions company. So we can help you find the right type of life insurance product and give you consulting when it comes to that. And so that's what that company specifically specializes in. So the way that the enterprise is set up is that we have different products and service offerings. And for example, Badu Tax Services is the tax firm. That's the firm that does tax preparation, tax planning, and tax representation for individuals and businesses across all 50 states in the U.S. And we also have clients in over 15 countries at the moment. So today we'll be talking about a very, 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 very important topic: how to build wealth, massive wealth, not just any type of wealth. We're talking an abundance of wealth through life insurance. I'll explain to you what life insurance is, so I'll keep it basic on that, and then we'll go into a bit of a more complex topic. Talking about a certain specific product, a specific life insurance product that can massively, and I mean massively, multiply your wealth. You're talking about wealth multiplier, wealth multiplication. This right here is it. Now, disclaimer before we continue. First and foremost, what I say on the radio show today are my opinion. I do back up the opinion with some facts. So certain things that I say today are actually true, right? They're actually facts. But other things I say are opinion related. And unfortunately, within the insurance and financial services industry, there's a lot of mixed opinions, right? so and so is selling this product, so and so is selling that product. They like it, they get commission from it. So for me, we get commission from everything, right? Taxes, credit repair, life insurance, permanent life insurance, term life insurance, whatever it is. So today I'm not here to sell you. I'm instead here to educate you on a particular product that only less than 1% of the entire world's population is aware of. Here's a secret. Most life insurance agents aren't even aware of this product that I'm about to tell you today. So the folks that are even selling life insurance, imagine that they don't even know about this. So that's how serious our conversation is today. And I want everybody to pay attention. I want you to take some good notes. Like this video, share the video, and just get the money moving. In 2021, we're all about abundance and we're all about victory, right? We're all about massive wealth. We're tired of the small stuff. The small potatoes we can't handle anymore. We need massive wealth. We need massive action. We need things that make a true impact. Although success begins in small increments, you start off, one step at a time. You start off small, you start off slow. At the same time, though, when you have your vision has to be bigger than what you're doing now. So this product that I'm telling you now, you may not be ready for it right now. But maybe 5 years, 3 years, even 1 year from now, you may be ready. So if you listen to this today, from start to finish, take some good notes, you will gain massive value from it. It is something that, me personally, I have one of these. So full disclosure, I personally have one of these products. So it's something I believe in, and it's something that I strongly recommend at least considering. And I'll show you different ways that you can maneuver with it moving forward. It's very powerful. You often don't hear life insurance even as a wealth building tool, period. Yet alone can you hear about massive wealth building. We're talking about wealth that can be built 10 times what somebody could do. So today's conversation is very serious. It is very eye-opening. When I heard about this, I was like, you gotta be kidding me. So that's the level that we'll get to today. But of course, as we always start off, we'll kick it off with a market report. And this report is as of February 5th, 2021. So as of last Friday. Let's see what happened in the markets. Let's see what happened in the stock market last week. Remember, you can feel free to like, subscribe. You're listening, if you're just joining, you're listening to us live on WGHC 98.3 FM, WGHC LP 98.3 FM, where change matters, and your voice, your music, your station. So with that being said, let's go into the market report really quick, and let's maybe spend 5 to 10 minutes on this one, and then we'll go straight into the topic of how to build massive wealth through life insurance. So stocks had their best day in several weeks last Monday, recovering from some of the losses following the prior week's sell-off. Tech stocks and retail shares led both the NASDAQ and the Russell 2000 to gains of 2.5%. So technology and retail shares basically went up last Monday. The S&P 500 advanced 1.6%. It was a great week in the stock market last week, by the way. Followed by the Dow at 0.8%, the global Dow at 0.7%, and then the yield on the 10-year treasuries fell 1.5%, while crude oil prices ultimately jumped 2.8%. The dollar gained 0.5% on the day. Consumer discretionary, information technology, or IT for short, and real estate, my favorite, right? My personal favorite investment on the planet, real estate. Here's a secret. We'll talk about real estate next week. How to build massive wealth through real estate. See, we don't give you biased opinions. We don't give you, we're not trying to sell you anything garbage. This is the real deal. If you want to be at the elite, if you want to be at the Bill Gates, if you want to be at the Oprah Winfrey, if you want to be at the Michael Jordan, if you want to be at an elite level of wealth, you have to be listening to this stuff. All right. So with that, yeah, so Monday was great. Last Monday was awesome. It was fabulous. Now let's talk about Tuesday. What happened on Tuesday in the stock market? Stocks pushed higher for the second day in a row last Tuesday. So good news already. Why? Several companies posted solid fourth quarter earnings, right? This is big. When companies' earnings reports are strong and good, it basically gives investors confidence in the stock market. So they feel more confident to invest, essentially. So with that being said, essentially what happened was that the retail trading frenzy of the past several weeks may have cooled down, right? So all that GameStop and Reddit and all this silver, there was a lot of manipulation in the markets over the past few weeks. So all of that has pretty much stopped. Now the market gets manipulated every day, unfortunately, but this was a big time manipulation. And by the way, shout out to Tom Brady for winning his 7th Super Bowl. Truly respect that man. Greatest of all time. Nobody greater, as it relates to football at least, than Tom Brady. I mean, that guy is quite impressive. Talk about a legend. That is Tom Brady. 43 years old and still crushing it out there. I mean, he truly motivates and inspires me for sure. I respect him for the player that he is. All right, each of the benchmark indexes essentially closed the day ahead, led by the solid gains of 1.6% for both the Dow and the Nasdaq, and then followed by the S&P 500 at 1.4%, the Global Dow 1.4%, the Russell 2000 at 1.2%. Crude oil prices continue to climb, gaining more than 2.4%. Treasury yields and the dollar also advance. Each of the market sectors increased, led by financials, industrials, and consumer discretionary shares. By the way, if you haven't already, please check out the book, my book, Infinite Expansion, How to Infinitely Expand Your Vision of Abundance. It's a book that was written before the pandemic. Ironically, it became so useful and critical during the pandemic because it teaches you how to multiply your wealth, how to create abundance for your life, not how to build abundance, but how to create abundance for your life, in order to basically, in order to keep growing, infinite expansion. That's the name of the book. It's available on Amazon. I mean, pennies on a dollar, and the value that you'll gain from that book is invaluable. Let's just say. I mean, all of my clients nowadays are reading it, and they're like, it's life-changing. And then also, if you do have a question, you can feel free to type in the chat. We're live today on Facebook and Instagram. Welcome to WGHC LP 98.3 FM, where change matters, and your voice, your music, your station. And somebody asked a question. Can't wait until you talk about real estate. Yeah, I love the topic, too. I'm getting excited just talking about it. I need a place to stay. Currently living in my car. Man, that's real. What more can I say? That's real. So we'll definitely talk about real estate, and we'll get to the bottom of real estate. Now, when I say real estate, I mean investment real estate. Not personal real estate, but investment. How to build massive wealth through real estate. Equities closed higher for the third consecutive session last Wednesday. The Global Dow posted the largest gain, climbing 0.9%, followed by the Russell 2000, which advanced 0.4%. Both the Dow and the S&P 500 inched up 0.1%. We got about 5 more minutes until we get to our main topic, so please bear with me. We will talk about how to build massive wealth through life insurance today. Let's see what else happened here. The Nasdaq broke even on the day. Treasury yields climbed higher, as did crude oil prices. The dollar fell less than 0.1 percentage points. Energy stocks were the big movers, gaining 4.3%. Communication services added 2.1%, and the remaining sectors were mixed. Last Thursday's trading led to another solid day for stocks. I mean, you're talking about Monday it's up, Tuesday is up, Wednesday is up, Thursday is up now. And today, the stock market went up today as well. And partly due to, and I'll explain more later, but there's a third stimulus package that has pretty much been passed, right? So that's something that can essentially be, that's essentially something that stimulates the economy. Now, I do want to address this comment. As the wealthy definitely abuse life insurance. I mean, I wouldn't necessarily use the word abuse, right? So when it comes to wealth building, there's a mindset. There's a certain way to program your mind, and information is one of the best ways to program your mind. So when I learn about life insurance, I'm actually, full disclosure, I'm licensed in life insurance. We own a life insurance brokerage known as Badu Life and Health Solutions, LLC. And I can tell you that if you can use life insurance in the right way, in a smart way, right? And I'll break it down to basically the different types that's out there. However, today's focus, we're going to focus on one in particular. We're going to spend at least 30 minutes talking about this one. I'm going to use examples and show you how to build massive wealth through life insurance. So I wouldn't use the word abuse. They're just simply building wealth. I mean, that's what we got to do. Now, there are people that commit fraud, unfortunately, through insurance, such as, God forbid, killing spouses and family members, loved ones. I mean, it's quite insane what all is happening out there. But I would say when life insurance is used in the right way, when you fully understand life insurance and what it can do, I mean, it's insane. And that's coming from somebody who invests 90% of my money in real estate, by the way. Like, I'm a strong real estate advocate, and I'm telling you today that life insurance is an awesome, awesome investment, right? That doesn't usually, if you're hearing somebody who invests 90% of their money into one thing, they're going to consistently promote that all day, every day, and probably nothing else. So the purpose of a show like this is we're raising awareness on certain topics. And I'm using my expertise on what I've learned in my 28 years of living to deliver you information that can help you create abundance in your life. That is the sole purpose of Money Talks, where all we talk is money. That's the name of the show today. But let's continue in the stock market. So last Thursday's trading led to another solid day for stocks. More strong earnings reports, coupled with a reduction in the number of people claiming unemployment benefits, provided encouragement for investors. So basically, less people are claiming unemployment, which is good. That means that the unemployment rate is probably going down, which means the economy is probably going up. It all starts making sense when you really sit down, think about it, put some numbers on paper, research, feed your mind with good, solid information. It all starts making sense at the end of the day. Repetition is key. Keep learning, right? And keep practicing this stuff. All right. So let's see what else happened on Thursday. All right. So let's just do about 2 more minutes on the stock market, and let's get into the main topic. So financials, information technology, energy, and industrials were the strongest performance sectors on the day. And among the benchmark indexes, the Russell 2000 led the way, gaining 2%, followed by the NASDAQ at 1.2%, the Dow 1.1%, the S&P 500 1.1%, and then the global Dow 1%. Crude oil prices, the dollar, and treasury yields all advanced. Stocks finished last week on a high note as each of the indexes posted notable gains last Friday. The Russell 2000 advanced 1.4%, followed by the global Dow 0.9%, the NASDAQ 0.6%, the S&P 500 0.4%, and then the Dow 0.3%. So that means the stock market went up all of last week. I mean, no issues there. Stock market went up all of last week. Impressive, even during the pandemic. We're doing great so far this year. Materials, communication services, consumer discretionary, and energy led the sectors. The yield on 10-year treasuries climbed nearly 3% last Friday, and crude oil prices increased 1.3%. The dollar fell 0.6% on the day. By the way, if you're not in the stock market, I strongly encourage you get in. However way you can, whether it's an Acorns app where you can invest as little as $1, whether it's a Robinhood app, a TD Ameritrade. First thing you want to invest in is education, right? Go to jeffbadu.com, JEFFBADU.com. Read and take notes on the article, The Sea of Green, how to invest in the stock market, right? Or Stock Market 101. Check out that article. It's free, right? Resources on that website are basically free. And start taking notes. Start learning more about how the stock market works. Once you do that, then you jump into maybe a platform such as Acorns, Robinhood. I do recommend you do some test trading. So you do some simulated trading just to see, maybe test it out for 30 days. Don't necessarily use that as your definition of success though, because the stock market is about long-term success. Same thing with what we're talking about here today with life insurance. Same thing with real estate. It's all long-term. You have to see it in the long run. It's not about quick buck, quick cash, get rich quick. No, it's not. Get rich quick doesn't really exist anymore unless you play the lottery, but we know how that ends up. Most people that play the lottery and win end up going broke or bankrupt because they don't have the knowledge, the know-how to properly manage that money, or even the fact that they can't even hire somebody to manage that money. All right, so let's quickly wrap up with this. By the close of trading last week, each of the benchmark indexes posted solid gains following the previous week's sell-offs. Strong earnings reports and employment data, hopes for more economic stimulus, $1.9 trillion, and I promise when it gets released, we will talk more about it. As a matter of fact, why wait? Let's do it 2 weeks from now. You know, success is about taking action. 2 weeks from now, we will do a segment. Man, I'm looking out the window in the snowy Chicago. I've never seen so much snow in Chicago before. My, oh my, it is crazy, crazy, crazy out here. But let's wrap up real quick. So, and then also, yeah, so the economic stimulus is bolstering investors' confidence. So the more they're releasing into the economy, the more the economy is doing well, the more money is circulating into the stock market, the higher the stock prices keep going up. It's just a cycle that repeats itself over and over and over and over and over again. And by the way, the product I'm telling you about today invests into the stock market. So it's powerful when you can combine two investments at the same time. All right, the Russell 2000 resumed its 2021 surge, gaining 7.7%. The NASDAQ, composed mainly of technology stocks, advanced 6%. My, oh my. I mean, I told you guys at the end of last year that tech is just going to keep going up. It's not going to stop anytime soon. Followed by the global Dow, the S&P 500, and the Dow. Bond prices slid, pushing treasury yields higher. Crude oil prices continue to climb, increasing by 9% on the week. Crude oil prices are already up nearly 17.5%. Gas prices, my, oh my. Year to date, no wonder I was at the gas pump the other day, and I was like, man, gas prices go up? And yes, they did. Crude oil prices went up 17.5% so far just this year. The dollar crept higher while gold prices continued to fall. By the way, what that means is people are driving more. They're actually going out more, which is crazy because we're in a pandemic. The national average for retail price for regular gas prices was at $2.40, which is higher by 0.017. Let's see here. For the week ended January 29th, domestic production of crude oil was 10.9 million barrels per day, the same amount as the previous week, but 2 million barrels less than a year ago. All right, so we're basically producing less oil. That makes sense. It's supply and demand. The less supply, the higher the prices. The higher the demand, the higher the prices. Life is really a game of supply and demand, by the way. It's who got it and who needs it. All right, so the Dow Jones so far is up. Let's see here. Is up 1.77% this year. NASDAQ, composed mainly of technology stocks, is up 7.51%. S&P 500 is up 3.48%. Russell 2000 is up 13.09%. The global Dow is up 3.99%. 10-year treasuries are at 1.17%. So interest rates are creeping up, at least on these. And then the U.S. dollar is trading at 91.01. Crude oil is trading at 56.97. And gold is trading at 18.11.20. And I should mention Bitcoin is also trading pretty high. All right, big shout out to Mr. Candy. Mr. Candy Ghana definitely taking over the world when it comes to that. All right, so the January edition. So for this week, the January edition of the Consumer Price Index, for CPI, a strong measure for inflation, is available this week. The index rose 0.4% in December, but only 1.4% in 2020, as inflation remained muted. So you might notice things aren't getting that much more expensive because people don't have that much more money to spend because of the pandemic. It's all supply and demand, right? It's all who got it, who needs it. Who got it, who needs it. That's all it is. That's what life is really. That's the type of game we play in life. Who got it and who needs it. The Treasury budget statement for January is also out this week. The December deficit was $144 billion, significantly higher than the December 2019 deficit of $13 billion. OMG. That means that we're spending way, way, way too much money. All right, so let's get into the topic of life insurance. For those that are just joining, first of all, welcome to WGHC LP 98.3 FM, where change matters, and your voice, your music, your station. My name is Jeff Badu, and I'm a parallel entrepreneur and a wealth multiplier, the founder and CEO of Badu Enterprises, LLC, which is a multinational conglomerate in the finance industry. And what we do is we provide a suite of financial services, including what we're talking about today, life insurance, how to build massive, right? And I like to emphasize, I put that word in bold on the titles because it is true, massive wealth through life insurance. All right. And by the way, my purpose in life is to inspire and support the super hungry to take hold of infinite resources in order to create an abundant lifestyle. So let's get to the basics of it. Life insurance. Now, we do have another segment, a separate segment that goes more general about life insurance, and I recommend you check out that segment. It's actually on YouTube, Facebook, Instagram. We post it all over. And we'll do another one later this year. My beautiful wife, Yvonne, shout out to her if she's listening right now. She's the CEO. She's the founder and CEO of Badu Life and Health Solutions, LLC, which is a life insurance solutions company that provides life insurance products and services for individuals, families, and businesses. So basically, life insurance it's a tool for you to have money left over when you leave the planet. Two things that are guaranteed. And in our world, we only know one, and that's death and taxes. In my world, we don't know taxes, basically. Or we find ways to completely mitigate taxes. 100%. Legally pay $0 in income taxes. Yes, it is possible. It takes a lot of strategy, it takes a lot of planning, and it takes a lot of preparation for it. It's a mental thing too. And we, of course, provide tax planning as a service where we can legally cut your taxes down to zero. Now, life insurance is also a very, very, very powerful tool as it relates to saving on taxes, right? The sweet part about life insurance is when you take money out of a policy through a loan to yourself, there's no taxes due because there's no taxes on loans, right? You quote unquote have to pay it back. And what do you use to pay it back? If you pass away, they use what's called your death benefit to pay it back. And if while you're alive, you pay it back. You can pay it back through the policy, through the cash value that is accumulated, or you can just write a check to the life insurance company. So let's break it down real quick. Life insurance is a tool for when somebody dies. Yes, when somebody passes away and, basically leaves the planet, they can leave wealth behind to beneficiaries. Beneficiaries are the people that receive the money when the person passes away. Now, unfortunately, that's how most people think of life insurance, and that's it. Like, they don't know anything else but that. Oh, yeah, I pass away. Next thing you know, my life insurance death benefit kicks in. It goes to my beneficiaries. I pay $20 a month for that, and that's it. That's what's known as a term life insurance policy because it has a fixed term. Somebody who's young usually has no business having a term policy unless it is dirt cheap, literally meaning that you can get it for pennies on a dollar, right? For example, as a CPA, the American Institute of Certified Public Accountants offers us a life insurance policy, state-of-the-art, very, very cost-effective. So I'm like, okay, let me just get it, right? I mean, it's cheap. I don't like using the word cheap, but let's just say it's cost-effective. So if you have one of those or you have an employer, then go ahead and do it. Now, here's the thing. God forbid, let's say that I'm no longer a CPA, I lose the policy. It's a term policy. Term policy can expire at any time, basically. And if I leave, let's say I was working at a job and I left it, I don't have life insurance anymore. It's gone. So how do you protect yourself from that? How do you combat that? Well, you set up your own policy in your own name or in a trust. Hint, hint, wink, wink. You can set up a revocable living trust and make that the owner and the beneficiary of the life insurance policy. As a matter of fact, with these types of policies, the ones that I'm talking about today, you have to basically set up a trust so that the trust is the beneficiary and basically the owner of the policy. That way, when you pass away, that policy doesn't have to go through what's called probate. Probate is the process where if somebody passes away, and shout out to my beautiful wife, Yvonne. Looks like she's joining us. But when somebody passes away, they have to go through a probate process for any assets that are not placed in trust. A trust is simply saying, I trust you to give my money to who it belongs to. Prince, unfortunately, died without a will nor a trust. So a trust doesn't go through probate. All assets placed in a trust doesn't go through probate. Yeah, I see her with the heart symbols. Absolutely love you too, Yvonne. A trust doesn't go through probate. And so one of the benefits of having your life insurance in a trust is that when you pass away, it doesn't have to go through probate. Probate can cost a lot of money. Prince spent millions of dollars, millions and millions upon dollars in probate fees, while people like Michael Jackson keeps living a dream, right, while he's dead, because he didn't have to go through probate. He had a trust. He had a will. He had the right people. He had information. He equipped himself with information so that he can still make royalties. Every time you listen to Thriller on YouTube, Michael Jackson gets paid, right? 5 seconds just passed by, Michael Jackson just got paid because somebody right now is listening to Thriller on YouTube. That's the way wealth should work, by the way. Where whether you're asleep on planet or you're asleep in heaven, you're still making money. That's how wealth should be. And this tool that I'm telling you right now is a tool for you to build wealth for the rest of your life. And shout out to Lily. Absolutely. She said the cutie Vaughn. Man, isn't too cutie Vaughn. Man. Absolutely. All right. So that's life insurance. You have the beneficiary, somebody who the money goes to. And we just mentioned it's best to have it as a trust. By the way, everybody listening now, if you have a child, you should have a living trust. Right, anybody with kids right now, set up a living trust so that assets can pass down to the kids properly and strategically. So that's that. So that's term. That's term life. Now you have permanent life. There's 4 types of permanent policies. There's whole life, which is nice, not bad, right? I started off with whole life. Then there's variable life, not bad. Then there's universal life, especially indexed universal life, which is what we'll be talking about today. And then you have variable universal life. That's life insurance on steroids. Full disclosure, I personally have one of those too. I just wanted to test it out a bit, see how it is. And man, that thing is powerful. But today we're talking about indexed universal life and basically how to get a bank, how to get into a partnership with the bank so that the bank funds your life insurance policy for you. Just like how we buy real estate. When we buy a 40-unit apartment building or a 10-unit apartment building, we have to put down 25%. Same thing here. We're putting down 25%, and the bank gives us 75% of the money to put towards our life insurance policy. You probably never heard that before, did you? When I found this, I was mind blown. And let's say you don't want to involve a bank. That's fine. We'll find a way to take out loans from your policy where you serve as the bank, right? Instead of going to a bank that has JP Morgan Chase on it, you have you, right? You have your name at the front of the bank. It's just that it's not a brick and mortar bank. It's an online bank, and you can transact with yourself. You can take out loans and charge yourself interest, maybe 4%, right? You can pay the money back. You can basically set these loans with whatever terms you want as long as you're legal. And let's say your loan, like you just want to be on loans forever. And remember, this is a loan to yourself. That's the part that a lot of people don't understand. Oh, I hate loans and loans are bad and all this and that. This is a loan to you, yourself. You, first name, last name, Joe Schmidt. Let's just say as an example. Joe Schmidt Bank, LLC, right? Loaning money to Joe Schmidt. That's what's happening here. Not a JP Morgan Chase loaning money to Joe Schmidt. It is Joe Schmidt Bank, LLC. He literally has a bank with his name on it. That's how powerful life insurance can be. If you need money to fund your kid's education, maybe your first child has turned 18, ready to go to college, you knock on the bank's door. As a matter of fact, you don't even have to knock. You can just rush right in because it is your bank after all. It's 24/7. You determine the office hours. If you want to hire employees, you can too. You knock on the door and say, hey, I need $50,000 because my child is going to USC, right? So, yeah, no problem. Mr. Bank, right? Mr. Bank, you are the bank, right? Or you are the boss. You are the owner. So here's $50,000, 4% interest rate, 30-year term maybe. Yeah, you can pay us back whenever, right? You can pay us back whenever. And you don't have to pay taxes on it. You say, hey, here's $50,000 tax-free to fund your child's education. I mean, that's powerful. Or let's do another scenario. Let's say you want to buy real estate. And with real estate, we got to put down 25% typically. At least on like if we're getting bigger buildings. We got to put down 25%. Well, why let the 25% come out of your pocket when you can go to your bank, knock on the door, and say, hey, bank, I need $250,000 to close $1 million transaction because 25% of $1 million is $250,000. You got cash value, the money that has built up in your policy over time. You have $1 million of, let's use different numbers. $750,000 of cash value. You go to your bank, 24/7, all access pass. You go to your bank and you say, I need $250,000 to close this real estate transaction. What can you do for me? Oh, you own the bank, right? Why are you asking us what can we do for you? Here's the money. Here's $250,000. Do you want a wire? Do you want a check? Do you want it to go straight to the title company? Yeah, that's cool. Guess what you just did? No money down. Using somebody else's money. So let me explain what I mean when I say somebody else's money, because the $250,000 isn't your cash. The $250,000 is the bank that you created. Another bank put that cash in there for you. And I'll explain the details of that. I'm just putting things in your head so you can see the power of it. Let's do another scenario. You want to retire at the age of 50 and you're 30 right now. No problem. You can take $60,000 a year, tax-free. My two favorite words in life are tax-free. And shout out to Kit. He said he'll have to come back and listen again. Yeah, absolutely. Take notes, please. Take notes on this stuff. This is very important. It is recorded, so you can go back in, take notes, do whatever. This is the stuff you won't hear on the news. I mean, right now you're hearing about COVID, oh, the world is ending and all this and that. But if you're listening today, we're talking about abundance. We're talking about massive, massive, massive wealth. We're talking about wealth upon even more wealth. We're talking Michael Jackson wealth, right? That's the type of wealth we're talking. And shout out to Tommy. Absolutely. He said, thanks for the knowledge, Jeff. All right. So question. Somebody asked a question. So you wouldn't have to pay that money back? Yes, you don't. Because it's backed by your death benefit, which is at $2 million. For these policies, you got to start off with at least $2 million as a death benefit, right? So let's just say you pass away and you have this loan for life. You pass away, they take $250 from your death benefit and they pay off the loan and they give the rest to your beneficiaries. Tax free. You know, that's the power of it. And if you do want to find out more information about this, I will get into the details, trust me. But if you want to do private, one-on-one to talk more about this, let me know. Feel free to reach out to me. Send me a message on Facebook. Send me a message on Instagram. Check out jeffbadu.com. Tons and tons of resources on there. We'll be doing more stuff like this. I mean, we've always been doing webinars. And we got a lot of stuff going on. By the way, quick plug. On Wednesday from 2 to 3, we will be doing a QuickBooks Live, a QuickBooks training. If you want to learn how to use QuickBooks to grow your business, that's hosted by the Chicago Minority Business Development Agency. So Chicago MBDA. And yeah, check that out. It's free. I'm doing it for free. And then also we got, we got a few more things that are going this week. And I'll keep you posted on that as far as events and everything are concerned. All right, so moving on. How do I get involved? Oh, man. Talk about an action taker. That's the question people should be asking right now. How do you get involved? You're stating scenarios. What is the first step? Reach out to me. Reach out to me. Send me a DM. Send me a message. Go to jeffbadu.com. Read the article about life insurance, right? It's called Till Death Do You and Your Family Apart. All about life insurance. Read about it. Read up on it. Get knowledge. As a matter of fact, before going into a meeting nowadays, I require whoever I'm talking to get some level of education about the topic before we talk to them. All right. So that's something to keep in mind. Yeah, shout out to Kadrana. So with the 15 minutes that we have left, let me explain to you what I'm talking about. This is known as the Premium Finance Bank Funded. It's called the Premium Finance Indexed Universal Life Insurance Policy. All right, let me repeat that. For those that are taking notes, you should always take notes. As you know, one of the 12 steps to creating an abundant lifestyle is to always have your notes ready, whether it's on your phone, whether it's a notepad. For me, I'm all about the Notes app on the iPhone. So ultimately, that's something to keep in mind. Always take notes. This is called the Premium Financed Indexed Universal Life Insurance Policy. It is the most powerful life insurance policy on the planet. It is the most powerful insurance policy on the planet. This is what the Bill Gates have. And you too can have it. I'm telling you right now that you can have what Bill Gates has. You can have what Warren Buffett has. You can have what Jay-Z, what Beyonce. They don't tell you about this in their interviews, or some might mention it. But this right here, right? If you got a real estate portfolio, big ups to you. But there's got to be some sort of foundation, some protection for that, right? And that's coming from somebody who invests 90% of my money into real estate. So this is not biased. This is to help you create wealth for you and your family. How much do you care about your family? Let's find out. This is, and I'll repeat it, it's so important. This is the Premium Finance Indexed Universal Life Insurance Policy. The way this works is you contribute, right? And for these, the minimum, $20,000 a year. Minimum, $20,000 a year. You contribute. And yes, you can borrow money from someone or somewhere to make this contribution. So this is the good stuff. And that's why I started off by saying, even if you're not ready for this, at least get yourself ready. Start seeing the vision. In my 2020 vision, this was one of those. And I attained that vision, right? I put it on my vision board, and boom. Second month of 2020, during a pandemic. You know, so with that being said, the minimum you put in is $20,000. And let me put an example here. The example here is $27,000. So in our example, we have a real life example of a 44-year-old male, right? Now, if you're younger, start it, right? If you can, if you have the means to do so, and you can always find the means. Read Rich Dad, Poor Dad, how he goes from I can't afford it to how can I afford that, right? Find ways to afford it. So basically, this is a 44-year-old male, and he's in good health. So that is one of the requirements. I should fully disclose that. You do have to be in pretty decent health, right? Not elite health, but good, decent health. And then basically he wants to do $1 million death benefit. So for him, he got on the lower end, $1 million death benefit. A death benefit is the money that goes to your beneficiaries when you pass away. And it grows over time as your cash value, the money in the policy grows. He said that his goals were to have a death benefit because he loves his family, protection because he cares for his family, and he wanted living benefits. He wanted to make sure that his policy isn't just going to his beneficiaries, but he wants to actually enjoy it. And then he wants a retirement plan. This is your retirement plan, by the way. If all my real estate failed today, I wouldn't be scared. I wouldn't be scared at all. It would suck, and I may cry, but I wouldn't be scared. You got to take risk. As an entrepreneur, we know we got to take risk. Calculated risk, of course. And he's going to contribute $27,000 a year just for 5 years. That's it. Just for 5 years. All in, he's in $135,000. And what happens is he has a bank. A bank. So this is 25% down payment. A bank is going to put in $50,000 for the next 10 years. This is why they call this the bank funded or the premium finance index universal life policy. And what we call this in our firm is the ideal infinite abundance plan. Infinite, because there's a bank that's willing to partner with you. They're going in. You own 100% of the policy, and they're going to give you 75% of the money. All you need is a 25% down payment. Yes, what we do in real estate, we can do with life insurance too. Powerful. Tax-free money too. So he's going all in $135,000. The bank gives him $500,000. Right? They're literally multiplying that money. And if you know how compound interest works, my, oh my, Lily said, wow, yeah. What we can do in real estate, we can do with life insurance. When I found out about this, I'm like, sign me up ASAP. I got the policy. I got it. I was like, sign me up. So with this, it's called a 5-pay. He pays 5 years at $27,000 a year. And the bank is going to give him $50,000 for 10 years. One of his goals was to retire at 65. So guess what he can do? Starting at the age of 65, the money, he's got $27,000 coming in, and then the bank credits him $50,000. $25,027 coming in, the bank credits him. And this money, the pool of the money is taken and invested into the market, i.e. the S&P 500. S&P 500 is composed of the top 500 companies in the U.S. The top 500, including Tesla, who's just going through the roof. Shout out to Elon Musk, the wealthiest man on the planet. My, oh my. And that's why we started today's segment, and every segment, with the stock market, because it's good to have some foundational knowledge about that. This is also indexed. The reason why they call this an indexed universal life insurance policy is because it's indexed to the market, meaning that there's a floor. I've seen floors of 1%. The minimum you can earn on this policy every year is 1%. Then there's a ceiling. I've seen as high as 15%. So the most you can gain, right? The lowest you can earn on this policy is 1%. So back in 2008, when the stock market went down like crazy, you would have gained 1%. While the whole world was crumbling, you would have gained. Talk about abundance. And then in the good years, like last year, the S&P 500 was up big time. You would have made 15% on your policy. So it's indexed. There's a ceiling and then there's a floor. You're protected. Guaranteed, basically. What's in return? Yeah, you do have to pay the cost of your life insurance. And then also, you have to make sure that you're paying the bank. The bank is going to charge you 3 to 4% interest. But here's what. Here's the game of money. The S&P 500 on average does about 10%. Every year. The bank is charging you 3%. The spread is 7%. You're using somebody else's money and making 10% each year. If you compound that, I mean, it's crazy. And then the bank, right? Basically, you're paying the bank 3%. By the way, not out of pocket. The policy pays it. And you're only paying the interest on their contribution. And then ultimately what happens is that you gain on average of 10%. Now the S&P 500 the past 2 years is, man, it's crazy. And yeah, so somebody says, save this on a live platform. So all my videos are saved, by the way. So go to my IGTV. And we post this on YouTube. So this will be available on YouTube. You know, like, subscribe, share it, all that good stuff. But basically, you're telling me that if I put in $27,000 a year, a bank is going to come in and triple, right? Or actually, in this case, you're putting in 27, they're going to give you 50, right? In most cases, you can do up to 3 for 1. So whatever you put in, the bank adds 3. Whatever you put in, the bank adds 3. Or 3 more, 3 times your money, basically. And that's what we call leverage. Leverage. If you haven't read the book, The Legendary Asset, 6 Reasons Why You Should Own Real Estate, you should. And we explain the concept of leverage in that book. How to use less of your own to make more. So with this fellow, he's 44, by the way. He signed up for this at 44. So those who say, oh, I'm too old and all that, no, he's 44. At age 65, he's going to be able to collect $50,205 for retirement for the rest of his life. Up until age 100. And at age 100, they'll just write you a check and basically say, hey, here's all the money. That's powerful. And he's going to have a death benefit that keeps accumulating in value because your death benefit can never be higher. Or I'm sorry, your cash value in the policy can never be higher than your death benefit because then it becomes what's called a modified endowment contract, which is not compliant with the IRS. So your death benefit, your cash value can never be higher than your death benefit. So as your cash value goes up, your death benefit goes up. Some people don't understand this concept. They're like, oh, yeah, you lose your death benefit. No, you don't lose you lose your cash value. You don't lose your cash value. They simply add the cash value to the death benefit, right? They're balancing the account. So it's a misconception, right? Education is key. Knowledge is very key. So this man is going to take $50,205 in retirement without touching the 401k, without investing in real estate. Although he could put this $50,000 and buy a bunch of 4 units, a bunch of 10 units. Yeah. And you have access to this money all day, every day. Remember, it's your bank. It is your bank. All right. So that's one example. Let me get to the questions in a second. And yes, this is powerful stuff. I mean, this is not the stuff that, this isn't the stuff that you'll hear anywhere, really, unless you're on a platform like this today. So you can access that money even when you're alive. Yeah. That's what any permanent life insurance policy. There's 4 types of permanent life insurance policies. Right? There's whole life. There's variable life. There's universal life, preferably index universal life. And then there's variable universal life. There's only 4. So let me just get this. And we shared that in an article. It's called Till Death Do You and Your Family Apart. All about life insurance on the website, jeffbadu.com, jeffbadu.com. Check out the site, subscribe, and you'll get access to all of those resources. Another question, is there a way to help come up with the 25? Oh my goodness, man. You guys are way too good, way too smart, way too intelligent. Here's what I did. I borrowed the money from a bank. So basically, I borrowed the money from the bank. I borrowed the money from another bank. And the bank that's at the life insurance company basically, gave me 75% of the money. So let's just use an example, hypothetically. Let's just say the amount that I wanted to contribute each year is $100,000. We already know we can get $75,000 from the bank, right? Let's say my annual contributions are $100,000 each year for 5 years. Let's just say that's $100,000. The bank is going to give me $75,000. All I got to put in is $25,000. What do I do? If I have if I don't have the $25,000, and here's a hint, even if I do have the $25,000, I'm still going to go to another bank to borrow the money. You can go to an uncle. You can go to whoever. Pay them some interest. So with that, and the reason why we're doing this, we're using leverage. We're gaining money. We're gaining 10% here, and we're only paying 4% or 3% here. You're using the spread, the difference. You're splitting the difference, basically. And with that, essentially, I borrowed, let's just say in our example, I borrowed the $25,000 from another bank so that I did a no money down deal. Right? And each year, that's how I plan to fund the policy. You're probably asking, well, how do I pay back the loan, the $25K loan? I mean, I'll find a way to pay for it. Always find a way for people to pay for your stuff. Right? So you can find somebody to pay for it. All right, so another question. The question is here, maybe this is what all those artists and celebrities do when they go broke. I mean, it could be. I don't think they're getting this stuff if they're going broke. I mean, somebody who's a true wealth builder is not going to go broke. That's the reality of it. So they probably don't know about this that we're saying to you today. Jay-Z knows about it. Warren Buffett knows about it. Bill Gates knows about it. Oprah Winfrey, Michael Jordan. All these billionaires know about it. And now you do too. So that's an example with the bank. Let's say you don't even want to involve a bank. You said, screw banks. I don't like banks. That's okay. I recommend you change your definition and change your language a bit. But let's say you said, screw banks. Well, here's another. This is a real life example. This is an actual thing that happened last year. We have a client, let's just call him Bob, and Bob is 44. Ironically, Bob is 44. Bob he reached out to me. He listened to the show, as a matter of fact, and he said that basically, I want to get the stuff that you're talking about. Like, tell me more. Show me more. We'll at least meet with you for 15 to 30 minutes, get to know more about your situation, if this is even the right product for you. All right, Badu Life and Health Solutions, LLC, is a life insurance solutions and consulting company. So we're not just going to sell you this stuff if we don't think it's right for you. You actually do have to qualify. You got to be in decent health. Got to show that you're liquid. You do actually need to, this is not for everybody. That's why this is usually only available to the wealthy, quote unquote. But you too can get it. If you got some cash sitting around, or if you're able to get some cash, right, using other people's money, then you can certainly do that. And by the way, in real estate, we do the same thing. What I'm telling you right now, we do the same thing in real estate. In real estate, we typically need to put down 25%. Let's just say on $1 million building. I know the bank is going to give me $750,000 all day, every day. But what if I don't have the $250,000? Or here's a hint. What if I do have the $250,000? Well, I go to another bank, knock on the door. I say, hey, I have $250,000 in the bank. Do you mind leveraging that, using that as collateral for $250,000? Yeah, they'll say, yeah, you know, you're a good borrower. You got a good record, everything like that. Yeah, here's your $250,000. Now we close on the deal with no money down. Or we can raise money from investors, or as a last resort, we use our own cash. Right? We could certainly do that. So that's the game. That's the power of real estate. Real estate, the nice thing with real estate is you get both pre-tax and tax-free benefits. That's why I love real estate, you know, more. That's why more of my money goes into real estate, because of that tax. That tax component is so critical. At least double, you get triple the tax benefits. You get in pre-tax, the money grows tax-free, and when you take the money out, you don't have to pay any taxes on it legally. In life insurance, the money grows tax-free, and when you take the money out, you don't have to pay the taxes. And if you set it up the right way, you can get a pre-tax benefit. But let's just quickly, we got 5 more minutes. Let me just demonstrate this. We got a fellow named Bob. He reached out to me. He says, you know, he got some money sitting around, and he's a growing real estate agent. He's slinging a lot of real estate, and he's also a real estate investor. But he says, man, the market is, you know, he kind of gets scared a little bit sometimes. So he wants something as a safety, you know, this sort of holy grail type thing. And so with that, I say, okay, well, let me tell you about a policy, something I know. And yes, BaduLifeHealth.com is the website to schedule consultations, or just to find out more information in general. Or you can just go to jeffbadu.com, and that directs to my website, and I can help you out, no problem. So he says, you know what, I'm comfortable investing $25,000. I told him all the stuff I'm telling you right now. Okay, he puts in $25,000 a year for 5 years, and there's no bank. In his case, there's no bank. So all in, he's in $125,000. By the time that he's aged, let's see here. By the time he's age 65, he can start taking out $50,000, and it increases. It gets increased, $50,000, starting at the age of 65, because he says he wanted to retire at age 65. So what happens in this case, instead of going to the bank, the reason why I like the bank is I just like using the bank's money. All right. So I like using the bank's money. But let's say you hate banks. Well, your bank that you just formed, the legal entity you just formed, Bob Smith Bank LLC, he can basically take that policy or he can essentially take the money that's in the policy and reinvest it as a loan, right? He takes the money as a loan and he reinvests it back into the policy. So each year, money goes in, they take out a loan, reinvest it back into the policy. Instead of him taking it out, they're reinvesting it back. At age 65, he can start taking $50,000. And at age 84, it increases to $66,000. So it keeps increasing. And then, let's just say that God forbid, he dies at at age 94. That year he would have taken out $100,000. So all in, he takes out $1.85 million. He was all in 125. He takes out $1.85 million, and his death benefit is now at $922,000. Right, almost $3 million just for having $125,000 in there. That's powerful. Index to the market. Unfortunately, and if he lives until the age of 100, he gets $2.4 million, right, in the policy, and then his death benefit is $2.8 million. At that point, they're just gonna write him a check. Actually, when he hits age 120, man, if this guy's if he's a monk and he lives till 120, they'll write him a check for $13 million. $13,526,000. Imagine turning $125,000 into $13 million. I mean, that is powerful. That's what you call build a wealth on steroids. And let's say he took that 13 mil and put it into real estate, where he can now do more 3-for-1 leverage. Now he just he probably will hit 100 mil easily with just $125,000. $100 million, right? That's the power of wealth, by the way. That's the power of wealth. So you too can have access to this. You too are abundant. You too can do this. So real quick, please reach out to us if you want to find out more information. Check out the book, Infinite Expansion, How to Infinitely Expand Your Vision of Abundance. This is recorded, so it will be reposted. And if you need more, just reach out. Reach out. The successful folks take action. The reason why Jay-Z is where he is today is because he takes massive action, right? So take action early. And, with that being said, thank you all for tuning in to WGHT LP 98.3 FM, where change matters and your voice of music, your station. My name is Chef Badu, and I look forward to continuously delivering you all some content. Thank you.